Good morning, everybody, and welcome to the second of the SFI live series of webinars with Saffron for Intermediaries. Again, I'm Jay Evans to be your host today, so I'm going to be putting your questions to my two guests today, who are Tony Hall from Saffron Building Society and Holly Andrews from Saffron Building Society. I'll let you introduce yourselves in a minute. Just a warning on this webinar, we are going to be doing a criteria clinic at the end. Just to pre-warn you, this is being recorded at the end of October 2020, so some of the criteria may have changed when you do watch this on demand, so please bear that in mind. This is an interactive webinar, so we're asking you to put your questions to the two of them. As I say, we've got a criteria clinic coming up later on in the show, but the initial part is to talk about JBSP and gifted deposits. So that's my introduction out the way. Now to pass you over, Tony, why don't you introduce yourself and your role at Saffron Building Society?
Thanks, Jay. Yeah, so my name's Tony Hall. I'm the interim head of mortgages and recently joined Saffron in July. But I've got over 30 years financial services experience and a strong background in lending and specialist lending. My key responsibilities include leading and managing the Society's drive for sustainable mortgage growth, and that's through working in partnership with our extensive network of distribution partners. My role also extends to other aspects of the Society, including ensuring the needs of existing Society mortgage members are looked after, and also managing Saffron Mortgage Finders, which is our open market mortgage advisory service.
Brilliant stuff. And over to Holly. Holly, why don't you just give an introduction to your role at Saffron?
Yep, so I'm the Intermediary Team Leader and I look after our BDMs here at Saffron. I've been in the Society for 5 years now and in the mortgage department for 4. We are currently a small team of BDMs, but are looking to expand within 2021.
Excellent. Just to remind everybody, this is an interactive webinar, so you can submit your direct questions to Holly and Tony. If you want to speak to a specific one of them, do put that in your question. You'll find the chat box on the side. You can allocate it as a question. I will notice it and I will put it to the guys when we get a breather. But first, let's kick off with a very specialist first-time buyer product called the Joint Borrower Sole Proprietor. I got it right this time, mortgage. It's a bit of a mouthful. So let's go with JBSP. Holly, why did you explain the JBSP products? Just outline it to the viewers.
Yep, so this is a first-time buyer specialist product. It's specifically for first-time buyers that are struggling with affordability, that need a supporter to go on the mortgage with them to be able to reach the loan size that they require and get them onto the property ladder. So we can have up to 2 first-time buyers and 1 supporter on the mortgage. The supporter will go on the mortgage, but they will not go on the deeds.
That's really important to know. So let's talk about the details. What's the LTV on a JBSP?
Yeah, so we are at 95% and we only require the first-time buyers to provide a 5% deposit. What we do stipulate in the breakdown of that 95% lending is that the first-time buyers can afford 70% of the loan size applied for, and the supporter then needs to cover a minimum of 30%. Okay,
brilliant. That's really good to know. Is there an age limit then? So on applications for JBSP, so if you're supporting your child, is there an upper age limit?
Yep, so the supporter at the time of application can be no older than 70, but the term isn't affected. So for our first-time buyers, they can have up to a 40-year term, because what we're doing in our manual underwriting process is that we're looking in the next 5 to 10 years that they can refinance and remove the supporter as their salary increases. So it's the term which is really clear with us is that it is not affected by the supporter's age.
Okay, that's really good to know. So we're talking a close family member. How close a family member do they have to be? Is it just mum and dad?
No, so it can stretch throughout the family. So you could be looking at parents and step-parents, aunts and uncles and grandparents as well. So there's no sort of restriction within it. We do allow the aunts and uncles, which sometimes with some lenders aren't deemed as immediate family members. So we like to just be able to give everybody the opportunity to get this, especially for first-time buyers at the moment where the market's so limited for them. That's why we've sort of designed this product and had it for a few months now.
Is it a popular product for for Saffron?
It is. I think at the moment where there's such a demand for first-time buyers and trying to get onto the property ladder, and there is limited high loan-to-value products, I think for us it's really key that we've been able to bring out this product to support first-time buyers where there isn't much around at the moment.
Tony, that brings me to the next point, really. We've just been reading in the industry press and actually into the national media now that there's been an influx of first-time buyers since the pandemic, but they're all being supported by mum and dad.
Yeah, it's definitely. I mean, the pandemic has I suppose magnified this, but it's been a growing trend for the last couple of years. The bank of mum and dad lending. So it's not new, but in terms of the growth now, and particularly as Holly mentioned that the availability of product at high loan to value out there for first time buyers is very limited. So lenders like us and others are looking at innovative, say that with my teeth in, ways to support the market where we can. So I mean it's a huge area, bank of mum and dad. It's I think the last time I looked it was sort of 8 billion pounds of lending per annum. So it's a big market, and we're just looking at ways where we can support that, and this product's doing that. And as I said, it's been out for us for a few months, and it's really starting to tick up in its daily volume for us, which is it's great to know that we've got an option to help people who've only got limited deposit or can't meet the affordability.
Well, I was doing a webinar last week for consumers, and we were talking about the fact that products are coming and going left, right, and centre. I mean, we had a debacle over first-time buyer products. They're so popular during lockdown, it's from never gone. So it is a changeable market. Do you think that you're likely to dip into more first-time buyer products moving forward?
Definitely, it's a key part of what the society stands for is helping people, get on the ladder for the first time and buy their own home. So, we're at the moment with the market with high loan to values, it's restriction. The only one we've currently got, obviously, is the JBSP. We did launch one, earlier in the year, and we're immensely successful with that. So we are keen to come back to the market when the time's right for us to within our own plans, and also offer the service that we need as well with that. So definitely, it's a big part of what we do.
Absolutely. We were talking about the Bank of Mum and Dad. There is one other benefit of the JBSP which we haven't mentioned yet, and that is a gifted deposit. Do you accept a gifted deposit on the 5%? Holly?
Yes. Yeah, no, we do. So we do allow gifted deposits actually throughout our mortgage product range. So there's no specific limitations on any of our products of how much a gift that they can get from immediate family members. But we do allow gifted deposits on this product as well.
So is there any restrictions on a gifted deposit? So I'm not going to mention any names, but there has been some restrictions put on gifted deposits by other lenders. Can you gift 100% with Saffron?
Yes. Yeah. So there's no restriction into how much a family member can gift. They don't, if they're first time buyers that need help onto the property ladder, we'll accept the gift. We don't even have to have the savings from the first time buyer. So yeah, there's no restrictions within it.
So essentially we're saying that if they can meet the criteria of the JBSP, the parents can do a double whammy and help their child with their affordability, and they can gift them the deposit, so to get them onto the property market.
Yeah.
Well, there's nothing sad to say about that, is there?
No, one of the things I was going to say as well, with the Joint Borrower Sole Proprietor, as I mentioned earlier, we look at the loan size that they're applying for 70% of the first time buyers being able to afford that. That's the minimum that they should be striving to afford. Then you've got the 30% from the supporter. But what we've done to try and make it easier for all our brokers is we've actually designed a Joint Borrower Sole Proprietor calculator on our website. So with the calculator, what we say is you key in the first time buyers to begin with. You key in to see if they can get 70% of the loan size applied for. And on the results page, if that is acceptable and they reach that limit, then you can progress through to then test the supporters' affordability as well. So that's one of the key things. We just wanted to make it easier, because we know in the market with Joint Borrower Sole Proprietor is that there's so much different criteria. It's just trying to make it as clear and as easy to use as possible.
Brilliant. That was going to be one of my questions, was about the website. So the website, just so in case anybody doesn't know, which I'm sure you do, is Saffron for Intermediaries.co.uk. If you go on there, there's actually a hell of a lot of calculators on there. There's a lot of information on there. So go on there, find out about the product, and then say, as Holly says, there is a criteria calculator on there, so you can at least have a look and have a play around with that. We know this, maybe some of the viewers are new and perhaps don't know this. Let's talk about the underwriting of a JBSP. How is it done with Saffron?
Yeah, so as with all our products, it is a manual underwriting process. So at the decision in principle, it is likely to refer for underwriters to review. The reason for that is they're going to look at the affordability. They're going to ensure that the application has been keyed correctly, so that there is a first-time buyer and a supporter on the mortgage. What you do need to key in, and this I want to make this quite clear, is that for the supporter, you do need to key in their commitments, living costs, as you would because they are an applicant, and that just means when we're assessing affordability, it's done correctly. And then submission of a full mortgage application, you're looking at providing all the documents for the first-time buyer, but there will also be a checklist items for the supporter. So they'll have to do proof of income, proof of ID, proof of address, and bank statements as well, because effectively they are an applicant and they will be liable for the mortgage. But we're as with most of our mortgages, we're very hands-on. For the BDM team, we're happy to run through with the calculator. And then once it's in, our processing team will help collate all the documents when you upload them to our mortgage portal. And then it will go through to our underwriters. And then from the underwriting, what they'll do is they'll assess the whole case, and then it will go from there.
This is going to be a difficult question, and it's not a pre-planned one. How long is it generally before the first-time buyer can drop off the supporting parent? So, I mean, especially if you've got a career ahead of you, you know that you're on a career path, you know your wages are going to slowly creep up. Is there a sort of typical time you see that happening with it?
The way that our underwriters look at it is they're looking at in the next 5 to 10 years. This product is a 5-year fixed rate, and we've only got one product available. So we're looking at from a minimum time really of 5 years taking it over as their career progresses. And it's just seeing that they are on that career path. There's no set industry or employment that they need to be in. It's just the underwriters taking a common sense approach to see as the years progress how their salary is going to increase.
How does it work for those that maybe are self-employed? Will they have a different set of criteria? What would the broker need to provide in order to please the underwriters with self-employed?
Yeah, so for self-employed, they must have a minimum of 3 years of accounts, and then we'll provide our normal requirements. So for a sole trader, you'll be looking at 3 years SA 302s, and for a limited company director, you'll be looking at 3 years accounts.
Okay, brilliant. I'm going to go very swiftly and very quickly just back to gifted deposits, because one thing we didn't mention. One of the questions I have for you was, what's the procedure with regard to gifted deposits? And there's a template, isn't there?
There is. So on the Saffron for Intermediaries website, what we've tried to do is all the essential documents that you would need are on there, and there is a gifted deposit template that's specifically addressed to the society, and it's a really easy form just to complete and upload to the application.
Just so everyone knows, the Saffron building site and the Saffron Intermediaries websites have both been updated. So if you haven't been on recently, that has been updated. There's loads of different tools. It's a lot easier to navigate. It's a lot easier to find a way around. So if you haven't been on, nip on, have a look around and have a look at the products there, because that's literally the most up-to-date information we have. Just a quick reminder that what we do talk about in regards to criteria and certain products will change. We are recording this in October 2020. So if you're watching on demand, just bear that in mind. Excuse me. Okay, so we're going to move to a criteria clinic. Now, we really do need your questions for this bit. So if you've got any questions on a specific Saffron Building Society mortgage, then this is the time to get your question in, or a particular application or something you're working on at the moment. You might not have approached Saffron about it yet. This is the time to really talk to these two experts and find out where you sit. So if you have any questions, there is a chat box on the right-hand side. Obviously, I know you've all said hello and good morning, but if you've got any specific questions, please give us a shout and I will look at them as we go through and put them to Holly and Tony. So do send those across. Okay, let's start on some criteria questions. So let's just talk about the world at the moment, because things are changing all the time. We're in the middle of a pandemic. We've got people that are coming off furlough and then potentially moving into this new scheme that Rishi Sunak has announced. We've got a market that's doing this all over the place, products coming and going. It is a difficult time. So let's just talk about furlough income. How much is that affecting and going to affect applications coming in over the course of the next few weeks, months? Tony, Holly, either one?
Well, I'll start and then Holly can put me right, probably, which is generally what happens. Furlough is clearly creating an issue because we've got people on furlough applying for mortgages, and we have to do extra checks to make sure that what their income is. So we've had to do more, employer references and things like that to check when people are coming back, what the income's going to be. So it's definitely made it a longer process, which is well documented in the industry. We know how long things are taking as opposed to how they used to. So it's certainly impacted us from that perspective. We haven't come out and changed our policy as a result of the furlough, like a lot of lenders have, because of our, common sense. Every case is, looked at by an underwriter. We've taken that view. So it's just assessing every case as it comes. Holly, I don't know whether you can add anything to that.
Yeah, I think for, just to really second that, we are looking at it on a case-by-case basis. If they have recently returned to work, we just need a letter to confirm and one pay slip to see them back in work. We are being cautious if they have been on furlough and returned with commission or overtime, just really, is to take that manual underwriting approach and the common sense approach to see how their industry has been affected, how their income's been affected, and just to ensure that, it's a responsible lending from our side, especially in such a volatile market that we are in at the moment with things changing all the time. It's how we're going through at the moment and just taking that common sense approach.
Oh, sorry. Sorry, guys. Just a little apology to everybody. For some reason, the chat box wasn't working. I've reset it. It is now working, and now it's running. I've reset it for you guys. So if you did try and submit any questions, please do send them now. Apologies, one of my colleagues just sent me a message saying it wasn't working, so I've reset it for you. And now we've got a bundle of questions to go through.
Yeah, I can see.
Through them all now. So we're going back to JBSP for a minute, because I've got quite a few that obviously we're trying to get through during that conversation. So obviously Ian Davis has put, why isn't it available, a JBSP not available to someone who can afford it?
Yes.
So 95% first time buyer, basically.
Yeah, so for us, this is a product. So when we launched back in June with our 90% and 95% products, we also launched with this Joint Borrower Sole Proprietor product. So as many people will be aware, we had it for 48 hours and that's all we managed to keep. However, we did manage to keep a lending transfer for our Joint Borrower Sole Proprietors. So we just decided that, for us, it's specifically designed for applicants that need that support. If you can afford it on your own, yes, we do understand there is no products out there for them. However, this is specifically for us to be able to support those ones that are struggling from an affordability side rather than just being able to get a product.
Okay, so you're going to have to bear with me, guys, to go backwards and forwards on this one. I'm just going to get through the JBSP questions. So can it be a couple and a supporter? I think we covered that, didn't we, Holly?
Yeah, it can be. So it's a maximum of 2 first-time buyers and 1 supporter.
Roy Bonds, but what about security from the parent? Are they guaranteeing 100% of the mortgage? They're just topping up, aren't they, Holly?
Yeah, they are. So they are liable as an applicant. So if the first-time buyer was to default on their mortgage, then it will go in arrears and it will be listed on their credit profile. What we do insist on a Joint Borrower Sole Proprietor product is that the first-time buyer has independent legal advice, just so that the supporter, they know what they're entering into, they understand that they'll be liable for the mortgage should their first-time buyers that they're supporting fail to make those monthly repayments.
Lovely.
Just to confirm that, Holly, you said the first-time buyer needed independent legal advice. You meant the supporter.
I did, yeah, sorry.
Confirm that, yeah.
Answers quite a few of the other questions that have come through. I think these have just been flooding in from when we were talking. So that should answer your questions. If you've got any further JBSP questions, please do send them in and I'll try and find them in the variety of questions that come through. It seems like we froze a little bit during the self-employed conversation, guys, so we might need to review that. Do you treat CIS workers as self-employed?
For CIS workers, they actually, on this, they have, in our particular criteria, we do need them to go on our contracting product range, which at the moment is restricted to 80% loan to value.
Okay, just back onto the JBSP again, because this is quite a relevant question. As a first-time buyer, if somebody's previously owned a property, how long before you class them as an FTB again?
Yeah, so we, first-time buyer criteria for us is that they've never owned a property previously. If they've ever owned a property historically, they won't be deemed as a first-time buyer for us.
Okay, thank you. Amar, we've answered your question on that, hopefully. If you've got specific questions regarding being self-employed and any products that Saffron do on self-employed, please submit your questions again and we'll put that into the criteria clinic and I'll add those to the questions we have now. Helpers on the JBSP, Holly, how many can you have?
Just one supporter.
That's fine. I just want to put that in there. And then we've got the question I was expecting on credit scores. So we've got the affordability built up by the parent. Presumably both have to have good credit scores.
Yeah, so we do an experience search on our first-time buyers and on our supporters as well. They must have a minimum credit score of 600.
Okay. Bear with me, I'm just wading through all your questions. Sylvia's put 5 years fixed is a long time. Is there any other products in the pipeline?
Not at the moment. It's something that we've had for a few months. We've recently did an update and a refresh on the product, but no, we don't have any further product designs for Joint Borrower Sole Proprietor just yet.
Okay. Will, on your question, he's put JBSP 2 on deeds and 1 borrower. It's the other way around. So it's 2 on the application, but only 1 person on the deeds. Am I right, Holly?
Yes, that's correct. So the first-time buyers will be the ones named on the deeds, and the supporter will not. They'll just be named on the mortgage. Okay.
We're going on to a gifted deposit question. These are flooding in now. Can they be loaned by a friend? I think I know the answer, but I'll let you answer it. Come on, Tony.
No, as you said, it has to be an immediate or close family member rather than a friend.
Okay. Steve Jacob has asked a very specific question. So, Holly, this might be for you in the day-to-day. Is there a basic case study that Tony and Holly can go through for the Joint Borrower Sole Proprietor?
Yeah, so I don't have one to hand, but I can certainly make one up on the for us. So yeah, for us, it's looking at maybe you've got a first-time buyer that needs to get on the property ladder and they are struggling with affordability. It might be that they are new to their role or trade. So what we'll be looking at is their income currently, and we will look at the income of the supporter. And we will be looking at the first-time buyer's ability to get that 70% of the loan size applied for. So we do have the online calculator that you run through. If you're going through that, then you're successful with the 70%, then you'll test the affordability for the supporter. So that could be a dad that's got a strong income, employed income or pension income. But the benefit with the product is that the term is not restricted by the father. So say, for example, the son is 24, you could be looking up to a 40-year term on that to take him to 64.
Okay, brilliant. We have got so many questions to go through. Thank you guys for submitting them. I'm trying to work my way through, and we might be in a bit of a logical order as I'm going through them, so bear with me. So a lot of these are on criteria and product. I'm just going to fire them. I mean, please choose between you or Holly or Tony who would like to answer. Carol, just in response, just so you know, I will pass your details on to Holly to speak to you after the presentation. So Brian Ledge has got a question on first-time buyers, self-employed, 20%, 1 year SA 302, second year limited company. Does he fit criteria?
Yep, I can take this one. So with less than 3 years of accounts, the applicant does need to go on our self-employed product range, which is available currently up to 80% loan to value.
Lovely. We're bouncing back to JBSP again. How would you assess liabilities and background for the supporter, stress their mortgages or just take the monthly cost?
Yeah, so you key in on the calculator and on the application, the commitments for the applicant. The overall calculation is stressed in the background with our background calculator. So it should give you an accurate lending figure.
Okay. Just on the JBSP again, sorry, just to make this clear, just for a question for Paul, do both applicants have to be a first-time buyer?
Yep, so for the first-time buyer element, yes, they do. The supporter, I think we actually missed this, must be a residential home owner occupier as part of our criteria.
Lovely. Sorry, Lawrence Rogers, you're going to repeat yourself, Hol. Lawrence Rogers has said, could Holly repeat what she said about CIS work? Was it an 80% maximum?
It is. CIS workers need to go on our contracting product range, and it will be restricted to 80% loan to value. What we do always say, especially with contractors at the moment, because their incomes and the way that things are declared, how they show their income, invoices, contracts are all so different, it's definitely worth giving the BDM team a call at Saffron, and we can run through it. We can have a look at the contracts, we can have a look at the invoices and pay slips, and just really get a better picture of what we're looking at for them. And so when it comes to our application stage, we've got a good sort of understanding about the structure of the client. The benefit is, and I am in a slightly different location today, I'm in the office, but we have been working from home for nearly 7 months now, as most people have been. And when we were in the office, one of the benefits were we were a stone's throw from our underwriters. However, that has not changed. We're still able to contact them on Skype. We have regular catch-ups with them, so we can run through cases pre-submission. And we do on a lot of the complex cases, really go through, see where we can help. You know, we do bespoke lending. So if the case doesn't quite fit, we can have a look at it and see that a way maybe we need to do some bespoke pricing on it, or maybe need to look at criteria tweaks. So yeah, we've not changed how we operate during sort of lockdown, and we've still got such a great relationship with our underwriters that they're happy to run through cases pre-submission.
I think, Tony, just talking to you from your position, this is a massive part of what Saffron's about, is it? This individuality and this like case-by-case approach. I want to bring this up because it's one thing I've learned about the organisation from doing these webinars and speaking to you guys is that warmth around a case-by-case basis. I don't feel I've felt that from other lenders.
Yeah, it's what we stand for. You know, it's always an interesting one because, you know, with service and speed being such a big driver in the mortgage market, that actually with our underwriters we might sometimes take a bit longer. We might sometimes ask a few more questions, but it's because we're trying to get the solution that's right for you and give our our intermediary partners the answer they're looking for, which is predominantly yes. You know, so it does take some time, but that's because you've got a human being. You know, we use technology to enable our humans, our underwriters, to do their job, but the decision is made by an individual with lots of skills and experience. So, you know, yeah, it's what we are, and you know, it's and we want to dial that up and do even more of that and get more people aware that, you know, not just across our JBSP product, but our entire range, that we have the ability to go beyond what our policy says in the right circumstances. So just because the policy says no, doesn't mean we won't do it. It's always worth a call.
I think that's so important in this day and age as we are at the moment in the middle of a pandemic. We don't know what's happening with the economy. We don't know what's going to happen in the market. And there's a certain reassurance that you're not just another algorithm case, and I think that's really, really important to get across.
Yeah, I think the key as well is just to make it clear that we don't always say yes, which and I know that's a source of frustration for people if our policy has said yes and when we don't, and we will always, where possible, provide a real reason as to why we can't say yes. But our approach is that if it makes sense, then there's a fair chance of us saying yes to it. But it's not every time. I just want to stress that point, But our commitment and, one actually we've got to get better at, if I'm being truly honest now, is saying no quicker when we mean no and not leaving out false hope for people. Because I know, from years of experience, how frustrating that will be for a mortgage advisor with a client desperately waiting for an answer and we don't provide it. So that is a clear focus for us.
Okay. Just a reminder that we are recording this on the 23rd of October 2020, but I will ask your question, Alan. What is the current 5-year fixed rate for the JBSP? Oh.
So you are looking at the moment as 4.17. It's a fixed until the 31st of March 2026. There is a £499 arrangement fee, and there is also an application fee of £180. And there will be a valuation fee on top based on property value. That information is available on the website as well.
And that is regularly updated. I'd just like to point that out. So yeah, the current rates as they stand are the ones that are on the website and as advertised as they are now. Just to answer multiple people's questions, can't remember all of your names, but the maximum age was 70. We did discuss that earlier, so I just thought to check that out there. So Marla answers your question as well. Sylvia, to answer your question, I will just chuck it at you just to repeat it. Can the supporter be released at any point if affordable on the JBSP?
So there is early repayment charges for the first 5 years on that mortgage. So if they were to remortgage in that time, they will be liable for the ERCs. But from the 5-year date, there's no additional.
Lovely. Okay, so from Nicholas Anderson, sorry, Holt, this is going to be for you again. For JBSP again, for the parent income, the parent's 55. Would you need pension income if only assessed maximum 10 years?
So for us at the moment, we'll be assessing what they're currently on, so their employed income. If they're more than 5 years from retirement, it's a lot harder to get projections or accurate projections. So what we'll be working on is what they're currently receiving now.
Okay. So just to go back, Martin, if you review this on demand, you'll see the whole conversation of JBSP, but it can be 2 applicants and a supporter. So if it's a couple, they can be supported by a close family member. So there was a question about aunties and uncles. They are a close family member, aren't they, Holly?
Yes, they are. And also on the parents as well, what you can be looking at is step parents and adoptive parents as well. It doesn't have to be by blood for the supporter if they're step parents or adoptive as well. That's
really good to know, actually. That's something I didn't think about. So step, adopted, fostered to a degree, I suppose. But yeah, just so, yeah, someone who can prove. What do you need to, there is a question here, but I can't find it, but it was about what proof you need of the relationship between those 2 people. So just ID?
As with all applicants, they'll have to provide ID. The independent legal advice as well should give us it will say a little bit more from the solicitors. There's no specific proof of document that we need. We'll just ask a little bit more about their relationship.
Okay. Just on affordability, and this is open to both of you, on commission, this is from Anthony Winston. Commission, what do you key on affordability? Last year's total commission or an average of the last 3 months?
That's holes, if you can tell.
I was hoping I could stay quiet on that one. No, it's fine. So for commission, you are looking at the latest year's P60 and we'll take 50% of commission. And what we'll also assess when you're providing the documents is the latest 3 months pay slips and corresponding bank statements. So we just want to see how, obviously, since the P60, the commission has sustained. But yeah, that's how we'll be looking at it. And if they've recently started a job, so they don't have the most recent P60 showing that, then it will be looking at whether we could look at an average of the 3 months annualised, but it's just how sustainable it's going forward. And with our commission, when it's non-guaranteed, so it's performance related, we'll always look at 50%.
Tony, I'm going to give you a chance to talk now. This is from Terry Fisher. Is there likely to be a tranche product and possibly impacted by wider liquidity issues? Frustrations are that deals just come and go.
Yeah, I understand that frustration. We've had this product out here actually since before I even joined the society. So I think June we launched this, and we have no intention of removing it at the moment. It's it's part of our product range, so it's not a specific tranche that we're dipping in and out of in this higher loan to value market. It's part of what we do. It's how we look to support first time buyers. So I can't obviously wave the crystal ball and tell you when exactly we may ever decide to remove it, but there's no plan to. It's not a specific tranche product.
Okay, great. Really random question, but a very valid one. Who do you use for credit scoring?
Experian.
That one. I can't find who you were. I just remembered it was in there. Forget it. So there's a one-word answer. Just going through your questions again. If you've got any questions, do ping them across. We're literally working our way through them. I think we've finally got most of those done. What is the policy on product transfers from Roy Bourne?
Yeah, currently we don't have a product transfer process for brokers in terms of a prop fee. We are acutely aware of it, and it is now under consideration. So as soon as we have further news on that, we will obviously communicate that.
We're going back to JBSP again. It's caught lots of attention, this one. This is from Roger Marlowe. Sorry, no, I do apologise. Roger, we've answered your question, but hopefully you've seen that. I don't know how long ago you sent that question, but yes, 70 at the start is the criteria on there. I'm just trying to find the question. I've lost it. So, it's again based on the supporter and the borrower. So, what if it's two couples whole? So, you got couple first-time buyers moving into the home and couple parents. Can you use combined? I presume the question is, can you use combined income of two people if they're a couple? So, mum and dad.
Unfortunately not. So it is specifically designed maximum 2 first-time buyers and 1 supporter on the mortgage.
Okay, brilliant. There's so many questions. I'm working my way through them. Guys, do keep sending them in, though. I will get through them, I promise. Just on furlough income, how much is it likely to affect an application? And will the same criteria be set with the new version? So obviously we've got this new Rishi Sunak's new scheme, which, forgive me, I've forgotten what it's called, this employee support program. I forgot what every message is at home.
Changes every minute.
So let's play with furlough. So we've got furlough and new furlough. Is this going to? I think we've answered this earlier, but it's just somebody had access issues. So is this going to continue now for the months to come? That we're going to be looking back and going, okay, you were furloughed, but actually, you're back full time at work, or and again, you've got those people that were supplemented the last 20% by their employers as well. So they might be furloughed, but they're paid 100%. But I suppose, as we all know, jobs are still at risk, potentially. So there must be a lot to consider in this process, Tony.
Yeah, it is. And, it's a really difficult one. But, jobs are at risk is more acute at the moment. But, nothing's certain in life. Jobs, even in the best of times, can disappear overnight. So, the view is we have to assess what the circumstances that we're faced with right now, and that's the approach that we take. Our driver is we have to make, under regulation and under God knows what else, and a moral thing is we have to make a decision that's right for the client in terms of we believe that loan is affordable. We can't knowingly just say yes to somebody because we want to. We have to demonstrate that at significant length. So in these scenarios, that's why we'll ask for the supporting information, and we might go deeper if we're not completely certain, and that's with an employer reference or other kind of proof to make sure that we are not putting a customer in a position where this loan becomes unaffordable at some future point. So it is a big consideration, and it will inevitably slow things down, and that's what you're seeing. We're not, other lenders saying, right, we're just not using that income anymore. Sorry. We're not saying that. We're just saying we'll still accept it and look at it, and we'll make a decision on an individual case merit.
That's really good, really good one. Julie's got a very interesting question that I hadn't even thought of. So Julie Gosling, this is yours. Holly, if a dad goes on as a supporter, currently employed, no debts, but later the dad wants to remortgage his own home, will this affect him?
It will, because he is on a mortgage. This mortgage will show on their credit file, so it is a commitment. They are liable for it, so it will affect. So that's something that they have to bear in mind and consider. It's just not their name on the mortgage. It does affect them as a borrower.
So at the end of the 5 years, if let's go with their son now meets the criteria for the mortgage, they can come away. At that point, remo shouldn't be a problem for them, should it?
Yeah, that'll be fine. Yeah. If they can remo and afford it onto a standard residential range, then that's it. They can be removed.
Yeah. What I would just say on that one as well is, obviously, if dad's already got a mortgage, we've done that affordability assessment in making our decision. So him going to remortgage with somebody else shouldn't actually impact him, because we've said yes to him already, knowing that he's got a mortgage. So the vice versa is he goes somewhere else and they'll assess knowing that he's got this mortgage as well. Mm-hmm. Now, obviously, affordability models vary between lender, but the premise should be that it shouldn't really affect him. Okay. Hopefully, Holly, did you agree with that?
Yeah.
This is thanks for your question, Amit. It's a little bit on the negative side. What happens if the helper dies during the initial 5-year deal? So your supporter sadly passes away. What does that mean for the first-time buyer?
I have to admit, I'm going to have to go back and find the answer to that one to make sure I'm giving the clearest answer. If I'm honest, we help our existing customers. We have an existing customer team, but the specifics of what we do, I'm not 100% sure. So, I do have your contact details anyway, so I'll get in contact with you after the webinar.
Just bear in mind, guys, if we don't get to your questions, or if we haven't been able to answer your questions, we will get in touch with you. We've got all of your contact details, but if you really do want a specific answer, you don't want to talk about, maybe it's a certain case in question you don't want to talk about on here, do feel free to, you can send your message privately to me, and I can then put that to Holly and Tony after we go off air around about 12ish. So I'm just going back to Roy. I will need more specifics on your question. If you could answer the question with some context, that'd be brilliant. Just James Rawlings asked, I think James had issues joining us early on, Holly. The time limit when the supporter can be removed?
So there is no time limit, but as we mentioned, we're looking in the next 5 to 10 years that the first-time buyers can take over the mortgage themselves.
Okay, lovely. So Roger Marlowe's just put a question. I have missed it. We're back to the JBSP again. So if after 3 years of a 5-year fixed and the applicant can now afford the mortgage on loan, there will still be ERC if just removing the supporter?
I'll take that one. That's fine. So yes, I believe so, as the product is a 5-year fixed rate. So if they're remortgaging to remove, then they will be liable for ERCs.
Here's an open-ended question for you, but one that we have touched on already. Tony was talking about this earlier. Tony, what's your current turnaround times?
Yeah, we are currently reviewing decisions in principle within 4 working days. Our processing for a new case and subsequent documentation is around about 8 days at the moment. We have brought that down recently from 12 days. So it's moving in the right direction for us. We are still very busy and we're conscious of that. And we're doing everything we can to bring that down.
Quick question from Keith Robinson to either of you. Why does the supporter need to guarantee 30% and not 25%?
That's the figure we decided that we would get to. I haven't got a further answer than that. Holly, I don't know if you know because you were here at the time of the product, but
no, it's just the way that our product was designed.
It's obviously done. There's obviously research in the background that comes to that figure, so there's obviously a reason for that. That's fine. Can you base your assessment income on 100% of the supporter from Ola?
No, we can't. We want their first-time buyers to be able to, as mentioned, to cover that 70% as a minimum.
Okay. Roy Bond's question for remortgaging his own mortgage, he will be assessed on 100%. He's only being assessed as a supporter on 30% of the mortgage. I think that's going back to what we were talking about earlier, as to, you know, if somebody has taken this out with their son and daughter, they will affect their remo. So I'm presuming that Roy's, I don't know if it's a statement or another question, to be honest, but obviously the criteria for the remortgage can be different to him achieving the 30%. I think that's the question, the 30% on the JBSP top up. Does that make sense?
Yeah, I think that for me on this one, it is, although they are only covering 30% of the loan size applied for with their affordability, they're still liable for the whole mortgage. So the whole debt would show against them as a mortgage that they've taken out, not just 30%. It's the whole borrowing. Okay,
that's really good to know. I'm glad you asked the question on death, because that's obviously popped up a couple of times, saying people are saying that's really useful. So that'd be really useful if we can get some information on that, and we will get back to you. If you would like particular information about that, I'm going to ask the guys for their contact details at the end of the webinar, and there will be contact details slide at the very end, just so you can take the details to the BDM team and have a conversation with them. So, but if you specifically want an answer to that, private message me, and I'll make sure that Tony and Holly get those messages, and we can come back to you once we know the answer. Can you do right to buy as part of the JBSP?
No, we can't. We don't offer right to buy.
No worries. We've got a case that's happened, so we kind of want to know. It's again down to what we're talking about credit and the current situation. So Holly and I have batted back and forwards on this one. Will you accept an applicant that has 2 defaults totaling £1,900 and only settled in January 2020? So very specific case. Oh.
Yeah, no, I'm happy to answer this one. So we wouldn't be able to consider for defaults totaling that amount. We need them settled for a minimum of 3 years. For a CCJ and default criteria, while we're on the subject, I'll go through that. So for all CCJs and defaults must be settled. And if they have only been settled in the last 1 to 12 months, you're looking at they can total no more than £250. If they have been settled in the last 13 to 24 months, then the defaults or CCJs cannot total any more than 500. Anything above that, it's settled for 3 years.
Brilliant. If you've got any more questions, do ping them over. We've got very limited time left, so we're just going to work through the very last of these questions. If I've missed your question, there have been lots coming and going, so if you could submit again if there's anything you need to know, please do bring that through now on any criteria on any product. If you missed any of our webinars previously, if you Google YouTube, go onto YouTube and just search in YouTube for Saffron Building Society or SFI Live, you will be able to see the original one we did on self-build and custom build mortgages, and obviously this one will be on there and any future ones. So these SFI Lives are directed straight to you as intermediaries, so we want to be able to answer as many questions as we can. Likewise, if there's something you'd like us to talk about in the future and something we'd specifically like to focus on, then let us know, because these are designed for you, they're not for us. These are to give you direct access to have a conversation in your own time and have a conversation away from your case and talk to these guys. So please, please, please do let us know if there's something you would like covered. Carlos, I think I missed this question earlier. What income will Saffron use for slightly declining income on self-employed over the last 3 years?
Yep. Do you want me to take this one? Yeah. So on a self-employed basis, if there has been declining profits year on year, we'll either be looking at the average or the latest year's figures, whichever is lower. But what the underwriters will do is we'll need some commentary as to why there's been a decline in income on the self-employed. What's the scenario around it? Is it the particular business that has been affected, or is the applicant looking to wind down the business slightly and just take more of a backseat? So again, it's that case by case that we do stress, is that come to us, talk to us about it, because we will want to know a little bit more. And if there's any concerns that the BDM team can't answer, or feel we want to make additional underwriting support, then we have got that close contact with them too.
I'll just jump in on that one quickly, just to say that, you know, with every case, if it's not obvious, tell us the story, because that way we can understand it, particularly with, you know, self-employed, where you might have decline in profits or spikes in profits. And a lot of the time, from my experience, is because people have invested in their business and therefore their profit has dropped as a result. Now, if we can see that and it makes justifiable sense, we might use the right, you know, the figure that's needed. But we're not mind readers. You've got to tell us the story. And one of the things you can do, outside of obviously speaking to my great team, is on the system, we have a notes facility at Decision in Principle. So you can write notes all about your case that then helps the underwriter answer that without having to come back to you. So you use that functionality. We really do. It helps us.
I think that's pretty key, actually, because one thing I was doing something on a few months ago was how businesses are fundamentally shifting the way they work. So as the the high streets declined and people went on foot and they were buying online, a lot of companies have invested heavily in IT to be able to become an online supplier and online shop. So that investment is for the future and actually will help to grow that business. So, but it will look really bad on your accounts, the investment money. So that's really key, I think, at this time of year. So that's really useful. Darren has asked a question, don't know if it's relevant, but are you issuing a CDP ticket?
That's a CPD for this, so it's not something that we've planned. So in our wrap up afterwards, I'll talk to Jay about that, and we can look at how we do that for you. Maybe not this time, but certainly for other ones. But we'll come back to you on that one.
Okay, and we'll make that very clear in the next one. If we've resolved that, we'll make sure that's very clear. Sorry, Holly, were you going to say something?
No, I was just going to pick up on, because Carlos has sent an extra question on that one. We would need both. We would need the tax year overviews and limited company accounts for the self-employed applicant.
Okay, thanks. Good question. Let me just quickly read it. So pretty much what we just discussed, Tony. COVID is likely to have an impact on many companies. With your underwriting, be more flexible, where it has been a one-off dip due to COVID. Will you look to underwrite based on standard criteria or be more understanding towards this particular situation?
Again, it's a case-by-case basis. It will depend on the business and the industry it's in and the prognosis for that industry going forwards. You know, again, so we are flexible anyway. As a lender, that's one of our strengths. And, you know, we are understanding of this scenario, but it has to stack up for us. So I think the answer is yes, but it's on a case by case basis. If we can see the dip, and it's obviously we can see why, and we can see a way forward for it, then that hopefully will make sense to us.
Have you seen Neil's question, Holly? Is the product available for new builds too?
It is. So for new build houses, they're available up to 95%. For new build flats, you are restricted to 75% loan to value.
Okay. Amit has asked the question if we can run a webinar on expat, on our expat offering, and I think, you know, while we're during the rate relief, the tax relief, perhaps that's a good chance to have a chat about that. So certainly something we can consider. We'll have a chat about it post this one a bit, and we'll let you know obviously when that's becoming available. Obviously we've got all of your details. And I think we've covered pretty much everything on there. If your question hasn't been answered, oh, one quick one just dropped in. Andrew Burgess, with the minimum value of the property?
It's 100,000, and that's across our whole product range. Is a minimum property value of 100,000. Just
before we go, oh, Michael, questions. I love the last minute questions. Michael, we'll get to it. Just got to you. Is there any plan to bring out lower rate products for larger deposits?
We continually assess our product range to make sure it's competitive in the market that we want to play in. There isn't any plan right now, but again, it's very fluid and we review this on a daily basis. So if we do make things different, you'll be the first to know about it.
Brilliant. While we're on here, should we just very, very quickly, we've got like 4 minutes left. Should we just quickly talk about the products that Saffron does that some of these guys might not be aware of, or ones that you think they should be considering on the range? There's a good chance to chat about something other than JBSP. So is there anything you'd like to highlight, Tony, Holly?
I think we have a special situation range of mortgages, which is designed, primarily for people who the high street aren't really interested in. The self-employed. We'll do 1 year self-employed on our self-employed range, or if you've got 3 years self-employed, you can go into our more owner-occupied range. So we mix that. We've got a contractor range of mortgages as well, and we've got a very what's the word I'm looking for? Our calculation for contractors is quite helpful in the market. So I've forgotten the words, it's my age, but we'll take contract rate times 5 days times 48 weeks. So we've got a generous calculation. That's the word I was looking for. Got there eventually. So we do that, and we've got the flexibility to look at any case that someone's got, and we'll give you an honest answer on it. We won't say yes to everything because we can't, and it'll be outside our appetite, but where we can say yes, we will. And actually, we have the ability to bespoke products and bespoke a rate based on risk. So if we've got a deal that comes in that actually probably doesn't fit our profile, but it's good enough for us to want to look at it, we might come back with a counter offer in terms of the rate or the fee. So that is an option that we've got as well.
I think it does. Again, we go back to what you said right at the very start. The very case-by-case personal touch by Saffron is very different to your typical high street lenders, and I think that's where we should leave today on just that. Zaf, you will be able to watch it through again, but I don't want to leave without answering your question. Holly, can you just go back onto the new build criteria for JBSP, please?
Yeah, of course. So for new build houses, we can lend up to 95% loan to value on that JBSP product. And for new build flats, you are restricted to 75% loan to value.
There goes Zaf. You got the last question at the last second. Right, that's it. We've run out of time. So this will be available on demand. It should be live on YouTube from next week. So what we'll do is we'll send an email to everybody to let them know this is happening. But for now, it's just a big thank you to Holly Andrews and Tony Hall from Saffron.
Thank you, Jay.
Society. It's been a pleasure. And we'll be back again, hopefully in the next couple of weeks. We haven't got a schedule down yet, but we'll have a think about the suggestions you've had with regards to what we can discuss, and we'll come back to you and we'll make sure we let you know in plenty of time. Thanks again to all our viewers. Thanks, guys, and have a good afternoon.
Bye-bye, everybody. Cheers. Bye.